Hello everyone, welcome back. Today we have news that Waymo has reached an agreement with the California Public Utilities Commission, with 23 of their stakeholders being for and 0 against.
Is anyone against Waymo's proposition? I hear nothing, so let's agree.
We'll be looking at that and also analyzing how a comment on Uber recently sparked my interest in Uber's future of autonomous vehicles. We of course have other things, like the credit rating of the US dropping because of a downgrade by Moody's Corporation, and how that can impact us as investors. We'll also be taking a look at my portfolio, the dividends I received, and how this type of news is affecting my portfolio. So first of all, let's start off with the news that Waymo is going to expand its reach. What do we have here? We have a great image of the Waymo car, proudly displayed on the header of the article. But what do we have here? The California Public Utilities Commission, or CPUC, has approved Waymo's request to expand its commercial robotaxi service area, opening the door for the Alphabet company to bring its driverless ride-hailing vehicles into more communities south of San Francisco. And Waymo announced that on X. And first of all, let me just get to one thing straight. They are doing 250,000 paid rides every single week in the US. Every single week. Every single week. Whereas Tesla is doing 0. If we take a look at this here, we have their comment on this whole situation. We are very excited to share that the CPUC has approved our application to operate our fully autonomous commercial ride-hailing service in the South Bay and nearly all of San Jose. While this won't change our operations in the near term, we are looking forward to bringing the benefits of Waymo One to more of the Bay Area in the future. You have this emoji of a robot and a car, showing you how they are committed to autonomous vehicles. Now, many people are divided between investing in Tesla or investing in Uber. Now, I think that some kind of compromise or balance can be made between those two companies. Think of it like this. Uber has a wide network, 160, million users, whereas Tesla has really incredible technology. Why not collaborate instead of fighting? You can invest in Uber if you are a Tesla investor. So, when I looked at this news, I was happy. But today, as a matter of fact, I had a bit of a discussion with a person on Substack, because as you know, I'm running my own newsletter, The Monopolistic Investor. And as it happens, sometimes I get to know others people's views. And this is what they have told me. Now, to give some context here, they made a statement that Microsoft is a good investment. Now, I mentioned that Microsoft is overvalued in my opinion, and companies like Google are better. And now, yes, they agreed on Google, but regarding Uber, now I will quote them. I am still not convinced that the robotaxi market will be fragmented and with many suppliers. Once the technology is ready, why would Waymo and Tesla give up their margin to Uber? Once autonomous vehicles are here, Uber's network effects break down. Driver supply is no longer relevant, and there is no customer loyalty. Waymo and Tesla will just steal all Uber's clients with Instagram and Facebook ads, the same way that Uber acquired them. Now, when this sort of opinion comes up, I'm carefully going to analyze this. And now, first of all, this person here, in my opinion, thinks that the market won't be fragmented by the robotaxis? Well, already Uber is collaborating with 14 autonomous vehicles companies. They have 14 partnerships. So that is one thing. Another is, look at this. Let me just read my comment. Sorry for the grammar mistakes, but I was a bit rushing. Have you seen Tesla? They are only talking and not doing actual progress that makes money. Waymo is already doing 250 paid rides per week, and Uber is collaborating with them. In terms of autonomous vehicles, you must remember that it takes time for a network to break down, but even so, there are economies like Poland, as you know, in Europe, and we have tons of bureaucracy and regulations imposed by the European Union. You know, the other day we had those, how do you call them? Those caps on the bottles. You can't detach them completely. You had to sharply tuck them away to get rid of them. You know, that's stupid. It's supposed to be ecology, bio-organic or something. Where I live, and I tell you, people do use Uber, and it will take some time before it's flooded by robotaxis. More things. I don't think many people trust autonomous vehicles. I personally wouldn't enter one. Driver supply will be relevant. Look at the freight and truck drivers. They will be needed. Uber can provide services to companies like Cisco, food distribution, Amazon, or even Walmart to transport goods. Let's also not forget Uber Shuttle, which drives many people at once to some of the busiest airports. And let me just say, that reduces the cost per user significantly. Quote, true, Tesla is behind Waymo, but this is a marathon, not a sprint. Yes, I know. Yes, the robotaxi rollout will be gradual, and Uber will be active for some time. The question is, when will they start losing market share and growth to robotaxi? The current deal with Waymo is a marriage of convenience. They need as much volume as they can get now to train the AI, and they are willing to give up margin for it. Once AI is fully developed, why would they pay 10 to 30% to Uber? As I said, Uber has no customer loyalty. I always check Uber all board and use the cheapest one, and I am not alone. Throw $1 billion on TV, Instagram, Facebook, and you have stolen Uber's customers. Plus, they own Google Search and YouTube, two of the largest advertising platforms in the world. They can show advertising there at cost, essentially 50% cheaper than Uber. End quote. Now, when this happens, this type of opinion is a strong one, and I'm not judging anyone. Anyone can have their own opinion, and I'm cool with that. So I had to take my time here. I turned to one of the best investors in the world, who takes a value investing approach, investing in monopolistic companies with high barriers to entry. And that person is Bill Ackman. And let me tell you, he recently invested in Uber. And I think it will be a very good time to go over the investment thesis behind Uber and analyze it in terms of my situation here. Let's see if we can somehow look at this person's opinions and my view on the company, as I'm thinking similar to how Bill Ackman thinks in this sense. So what we have here, Uber. At the time it cost $79. Right now Uber costs around $91. Let me just tell you, world's largest leading rideshare, mobility and delivery marketplace. Uber's business model has strong network effects that reinforce supply and demand growth. 170 million monthly customers and 8 million drivers across 70 countries. Large demand increases driver utilization. Large driver supply decreases wait times and user prices, essentially making it even cheaper for users and thus gaining more users. Gross bookings, or trip value, of $160 billion is split between mobility and delivery. Fast-growing international business accounts for more than half of bookings. Industry-leading management team, led by Dara Krowszadny, sorry if I said that wrong, I'm Polish, and also I think anyone who is English will also have a problem, has vastly improved operational discipline and capital allocation. Yes, so they are. So what he's saying here is that the team is making sure that the company is finally turning a profit, and they did. Many people thought that Uber will be unprofitable for many years, or forever, but they proved them wrong recently. And that is because of this person here, Dara. He led the team to become more efficient in the way that they are working, and so finally generated real profit, which means free cash flow for us investors, and we are happy for that. And now management, so Dara, is targeting 30% plus annual earnings per share growth over the next several years, driven by mid to high teens revenue growth, robust margin expansion. Now, margin expansion is a very important thing, as it means that keeping the same price, you can earn more because you're doing more efficient selling. You're the price per unit or per ride is going down for you, but you can keep the same price as it is for something like 2 years maybe, or 3 or 5 or 7, just like Costco, you know. They are taking a really interesting approach to capitalism by making sure that they don't become too greedy, only be so that they provide actual value to the customer, and I think Uber is one of those companies. And Bill Ackman also highlights the fact that they are trading at 29 price to earnings due to concerns regarding the potential long-term threat from autonomous vehicles. Now, the management here in Pershing Square Holdings believes that the long-term risk from autonomous vehicles is limited, and they estimate that Uber's share price is likely to more than double over the next 3 to 4 years. Now, I myself don't look at this time horizon, I look at a wider angle, you can say, time span. I personally want companies which I can really forget about sometimes, to not worry at night, to sleep well, and so I want companies which are reliable, durable, companies with high barriers to entry and not easily not disturbed but distracted, something like that. I don't want them being disrupted by some smaller companies, and Uber is the largest of them all. Uber is larger than Waymo, is larger than Lyft, is larger than Bolt, is larger than DoorDash, is larger than Takeaway or something like that, is larger than Glovo. You know, you can name many companies, but the one that stands out is Uber, purely because of their size. Because of them being the leading global two-sided marketplace with strong and growing network effects and ingrained consumer behaviors, like for example their Uber One subscription, that drives expanding user frequency in the app. Strong consumer and driver synergies from integrated and scaled mobility and delivery platform. That is positive. Because of consumers using this app and drivers using this app, you have more people at the same time, which means more rides at the same time, which means more happy customers at the same time. and it means exponential growth. That means that new customers and increased frequency means more customers. More customers, yes. Large degree of fixed costs allow for significant operating leverage. For example, a 3% annual headcount growth versus 20% annual bookings compounded annual growth rate since 2019. What that means? It means that 3% annual headcount growth is small compared to their 20% trip amount growth year over year. That is a grain of sand in the ocean of this. That's why it's a great thing. Why do they think they have significant earnings potential? Well, first of all, they say, look, they show you a chart showing that they are going positively. You can see management guidance here. They believe that the company's rapid earnings growth is likely to continue as it maintains high revenue growth and leverages its fixed cost base. Now the share price is all over the place with how do you call it? With companies, like Tesla or other electric vehicle companies, all racing to make the robot taxi. But Uber is taking a different approach. They aren't making their own robot taxi. They are collaborating with existing ones, which in turn makes it a lighter company, Now, here Bill Ackman says that the long-term risk to Uber from autonomous vehicles is limited, as autonomous vehicle companies are likely to partner with Uber over time due to its strong value proposition. 20% per ride take rate is low relative to the value it provides, which maximizes vehicle utilization and driver revenues. Attempting to replicate Uber's capabilities instead of partnering with them is economically irrational. Notice the word here, irrational. So Bill Ackman says that anyone trying to compete with Uber is irrational. Now, whether that is correct or not, I allow you to think of it yourself. Uber already has 14 autonomous vehicles partners across mobility, delivery, and freight. Now, freight is the delivery. So, I analyzed a company like Cisco, not Cisco, the San Francisco company that makes security things, but in the internet, those routers and blah blah blah, all of that. But Cisco, the largest food distribution company in the whole world, with 204 warehouses in the US. They could, benefit from the fact that Uber could collaborate with them and transport food supplies to their distribution centers or to customers, That is one thing. Uber's product and geographic diversification, because think of it, it's in 70 plus countries, or maybe 70, something like that. It's in my country. And their international mobility is more than 50% of all bookings, so all trips. And large-scale autonomous vehicle introduction is unlikely. Why? Well, in their opinion, it's due to underdeveloped markets with lower per-trip monetization, for example, Brazil and India. Will try to introduce a large-scale operation of autonomous vehicles in India. I think it would be very hard to do. Or stringent regulations, for example, Europe. Oh yes, I can go on and on and on about the very much bureaucracy that we have here in Europe. You even have to sign a piece of paper to get meat from a chicken, It's stupid in my opinion. It's stupid. So, in their opinion, large-scale rideshare introduction of autonomous vehicles is unlikely for many years because many technological advancements are required for that. Consistent superhuman safety profile is needed for wide-scale consumer acceptance. And autonomous vehicles currently regulated by states and federal transportation are appropriately cautious, those state and federal transportation agencies. Now, capital-intensive road infrastructure, car charging and parking build-out are required for large-scale autonomous vehicle introduction. Now, you can debate with that. You can have cars like Tesla, of course, which Elon Musk is saying that you just drive over this thing and it replaces your battery in and of itself. Now, I think that he has a long-term vision. I do congratulate that. I'm not against his company in any way. I always support entrepreneurs. I believe that every business should exist. Not to hurt anyone, that is my only thing. So, in their opinion, investing in Uber is a good decision. Now, there are some people who disagree with that. I myself have aligned my portfolio with the growth thesis behind Uber. I'm not shorting Uber. I'm not long on Uber. I'm just an investor in Uber, and I own how many shares? Well, here it says this amount, but I think it's probably a little bit smaller because it's also my brother who is investing. So I own, I think, 1.5 shares of Uber, something like that. And so it's the largest position currently. It's trading sometimes places with Google. But you can see I'm very much focused on those two companies, as I think they are showing some of the best growth potential in the market relative to the value that they are at. Right now, Uber is at 92. I believe that Uber is worth at least $200. Now, whether that is correct or not, you can check it out for yourself. In making a discounted cash flow analysis. I made a website for that actually. And it's right here. Let me just load it. Search for Uber. Click details. And we have it here. Now, let's wait for it. It will show you. Yes, all of those data. Alibaba shouldn't be here. Okay, sorry, let me just go down. Yes, so we can see even this revenue growth rate is really small. So I really believe that they are worth more than today. Of course, this isn't financial advice, do your own research. But what I'm trying to say is that many fears are overblown. You need to make your own investment research and keep to your opinion. But of course, sell if you believe that you can't sleep at night, because you as an investor need to be calm and be happy that you don't have to stress, unlike those day traders which are more stressful and probably don't sleep at night. Now, next up, we have the US credit rating being downgraded by Moody's. Now, Moody's Corporation is a very high quality company that is in the credit rating industry. It is worldwide recognized. The same with S&P Global. And here we have the official report from Moody's. You can see the official website. And this happened 4 days ago. But this has been such a significant news item that I needed to tell you about it. Many other people are talking about it, and I think that it will be beneficial for you to see it from my point of view as a 17-year-old investor in Poland. So we can see that they changed their rating of the government of the US from AAA, so the same as Johnson & Johnson, to AA1. Or sorry, wait. AAA, I think it means capital, all three capital A's. Well, we don't have that. We have capital A, small a, and 1. Yes, that is what is their opinion, and their outlook is stable, and it was negative. So I guess it's up. Yes, the outlook is stable. That is better than negative. They are also saying that successive US administrations and Congresses have failed to agree on measures to reverse the trend of large annual fiscal deficits and growing interest costs. Now, they believe that because of Trump's deregulation, so smaller taxes, that means that the interest rates will go up, thus making it harder for the US government to get money needed for its interest payments of the debt. What does it mean? It means that, in their opinion, the government is going to earn less money than before. Now, of course, the US government is saying that no, because of dodgy and because of all of those deregulations, it's going to be better. First of all, let me tell you, I'm not really into politics. I don't want to fight with anyone. I just look at it from a financial perspective, and what they say here is it's a balanced risk. The US still retains exceptional credit strength, such as the size. Remember, it's the world's second largest economy. Resilience. Remember the Great Depression? It happened, and they got out of it. Dynamism. Open AI. And the role of the US dollar as a global reserve currency. You can see that the dollar is on many forex exchanges. You can see this in many currency exchanges. The US dollar is there. And so the stable outlook takes into account institutional features, including the constitutional separation of powers among the three branches of government that contribute to policy effectiveness. Now, if the Federal Reserve, read by Jerome Powell, is independent, then it's okay for them. What we don't want is politicians going into this Federal Reserve and doing something nobody wants, putting pressure on those people who are doing their job right. Now, for more than a decade, the US debt has risen sharply due to fiscal deficits. For them, interest expense and mandatory spendings is projected to rise around 78% of total spending by 2035. Now, I don't understand many things that they say here, but they highlight the fact that they recognize the US significant economic and financial strengths, they believe these no longer fully counterbalance the decline in fiscal metrics, so the decline in the revenue that the government has currently because of lower taxes. And so they go over more of the fact that it's a very resilient economy, all of that. But then they mention what could lead to an upgrade or downgrade of the ratings. Now, a significantly faster and larger deterioration in fiscal metrics could weigh down on the metric. Now, they don't think it's a likely scenario, since a credible alternative to the US dollar is not readily apparent. Yes. Where is this thing that could lead to an upgrade? Yes, here. The implementation of fiscal reforms to significantly slow and eventually reverse the deterioration in debt affordability. So what they mean by that is that the government earns more. I think that if the government treats small businesses even better, then this could lead to more revenue for the government. But of course, you can't always be great for everyone. So this, when that would happen, this could lead to an upgrade for the government. And that is all, really. I won't go into many opinions of people. I just want to tell you how that could impact my portfolio. Many companies which I own are software companies, so I'm not really concerned about them. But I have companies like Ultra, ASML, Caterpillar, or Starbucks even, or Mondelez. Those companies sell goods. Now, depending on where they are produced and sold, that could mean some tariff impacts. We have the 90-day pause from the Trump and China agreement. That is okay. Let's wait what will happen. Now, I'm not too concerned about the whole situation in my portfolio, as I have many companies. Well, only a few, but still pretty diversified. Now, I'm not concerned about ASML, even though its customers are sometimes China, because of the fact that they are a monopoly, and monopolies will need to exist. Now, Mondelez is a unique company. It produces food around the world in many different places. So it also depends on that. I'm not too concerned about them. Caterpillar could be one concern, but they source it from many different parts of the world. So, they're still diversified. I'm not too concerned about them. And so, it depends on the whole situation. For me, it's not a big deal, but for the markets, it could mean something a bit maybe uncertain. That's why we saw a slight dip here. I think that might be the reason. I'm not exactly too sure. But, other than that, we also get news that Selena Gomez is finally making a new Oreo cookie for Selenators. Now, she's saying that making her own Oreo cookie was a lot of fun, and she grew up loving them. And so, because of that, Mondelez is collaborating with her, to tap into the mind of her fans. As you know, here is one of them is her signature, which is unique. It's the first ever on an Oreo cookie. Why am I mentioning this? Well, because recently we had Oreo collaborating with Minecraft movie, so Microsoft basically, and so we had this. I actually bought it when that happened. I must tell you, they tasted the same, but it looks cool, I must tell you. And many people thought that as well. And so I'm happy that Mondelez is taking the steps to grow their revenues even better, which could lead to more pricing power in the future. Anyways guys, that would be it for this video. Hope you enjoyed it, and I will see you later. Have a nice day. Goodbye.